Hello, everybody. This is Greg Gossett from Gossett Trading and Mentoring Live. And today is Wednesday, May 29th, 2019. We are now in the last hour of the trading day. I believe that the prices in the last hour of the day and actually the prices closest to the close are the most valid prices of the day, and that's why I make my trading decisions on getting in a position and out of a position based upon the last hour of the trading day. I just think they're the best prices to make your decisions on. So we are having another down day. It seems to be a trend. Currently, the Dow Jones is down 342 points. That's on top of the 230 down we had yesterday. NASDAQ's doing a little better. Percentage-wise, it's down 83.03, and the S&P is down about 30 points. So it's been a tough trading environment to the long side. So I hope that if you are trading, you're being careful, staying safe, position sizing correctly, not being impulsive, making a plan and sticking to that plan regardless of what happens. It's the only way you're going to be a long-term trader is if you have a plan and you follow it and you're not impulsive. You don't make large decisions because you think something's going to happen. Wait and let the technicals of the chart confirm to you that what you want to happen is happening instead of anticipating. Okay, so the plan for today, first off, we're going to run the legal disclaimer. That's about 40 seconds. We're going to come back. We're going to take a look at my current positions, when I got in them, why I got in them, and how I'm going to manage them going forward. And then after that, we're going to go down through my list of stocks in my watch list. We're going to analyze the technicals, and we're going to see if there are any potential entries for today. So that is the plan. And then after we go through my watch list, after the market closes, if you have any questions whatsoever, please feel free to just type them into the chat box there, and I'll be happy to answer them. If you're not sure about something that I discussed during the live stream, or if you want me to look at a particular stock that you may have, I'm happy to give you my opinion. So, okay, here comes the legal disclaimer. Please hold on for 40 seconds. I'll be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay. Well, what a day! What a day! It's been quite a week. It's been quite a last 5 weeks. We've been down for 5 weeks in a row, it's important that when you're trading in this kind of environment that you trade safe. The market will go back up again sometime, somehow. We just don't know when. So, let's follow the chart. Let's follow the technicals. Let's wait until we're given a signal to get in instead of just making an impulsive decision. And that thinking, right? Well, it can't go any lower than here. I mean, we've all been there, and it certainly can. I can tell you from 24 years of trading that it certainly can. So, in the bigger picture, it's always more important to preserve your capital than to make capital. Making capital is nice. Obviously, that's why we do this. But more importantly is to preserve the capital that you have. Okay, so hey, Mount Doji. Hello, what a day today. Haha. Yes, it is pretty brutal. Thanks for coming in, or thanks for tuning in, Mount Doji. David Gordon Russell. Hey, Greg, how's things? They're good. They're good, David. Thanks for asking. The trading's been pretty tough, but on the other hand, I have been pretty light in my portfolio. And, when days like this happen, when weeks like this happen, it's important to concentrate on the positive, on the things that you did positive, like not having too large of positions and staying patient, things like that. So other than that, things are good. Out hiking in the mountains with my dog, stuff I like to do. So hope everything is well with you. All right, well, let's take a look through my current positions, see what we have going. All right, so Etsy was my big stinker of the day. That was about it, but I purchased Etsy here on the 24th of May when we had this V2 entry. This is day 1, day 2, day 3. Day 2 washes out or goes below day 1. Day 3 closes back above day 1's close. And then in addition to that, MACD was over 50. We had higher lows previous to the trade, which is always a good thing to have. Yesterday, we did hit one of our profit targets at the very top, which I'm really grateful for that, because that really helps with your commissions, taking partial profits. And then today we dumped. And as you know, my end of day stop on this particular trade would have been a close below these moving averages, because it should have held support with these moving averages underneath it. However, I do have an emergency stop in place, and because I like to make my decisions at the end of the day. But if this just kept going down and down and down and down and down, at some point you can't wait for the end of the day. So I had to have a 5% emergency stop in place from my entry. And as you can see right about there, it's about 5%. So intraday, I did have to go in and lock in the loss on the remaining 90% of the positions that I have. It's too bad. I like this setup, but you never know, right? I mean, that's the key. No matter how good a setup is, you never know. So the only control you have when you really distill it down is how many shares you're going to buy. Honestly, that's the only control in the market that you have. Where you get out, yeah, I mean, most of the time you have some control over that, but sometimes it will gap, it could gap 10% below you. You would not have any control over that overnight. So, excuse me. So the only thing you have control of is the amount of shares you buy. So always be cautious. Always, 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 please. So, okay. So we are out of this intraday. This was kind of a big whack, but that's how it goes. And so we'll just look forward to the next trade. IBB, I did buy this back here on the 21st of May. Similar to Etsy, when we had this higher low, we had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. Did move up and down for a while. We did get out of about 22% of this trade on this day here, thankfully. And then yesterday, my initial stop was a close below the halfway of this washout bar of the V2. And you can see yesterday it got just right there, almost to the penny, but did close above and kept me in the trade. Obviously in hindsight, I wish it would have just barely closed below. We would have gotten out. But looks like today we are certainly going to close below this line here, which was my initial stop. So that was the plan. Stick with the plan. This was under the 200-day moving average. So thankfully I only took a half a position, and that is why. When the price is under the 200, that's generally when bad things can happen. Doesn't mean you can't take a trade there, but I have just found in my experience that when things are underneath the 200-day, it's just a good policy of mine to just take a half a position. So looks like we'll be getting out of IBB today. Silver. I did buy silver back here on the 20th of May. The reason I did is we went under 30 and back over 30. We also were under the third ATR channel. That's this line here. And we closed back above. It moved sideways for a couple days. I did get out of 3 profit targets here on the 23rd of May. So I only had about 33% left. Yesterday, it really did puke to the downside. I did stay in it, and the reason that I stayed in it was because it did hold the 30 RSI still, and it did wash out and go back above the third ATR channel. So grateful that I made that decision. You can see I did hit 2 profit targets today, so helps a little bit with the other losses. So going forward on this, I'll be targeting a 50 RSI to the upside or a close back below the 30-day moving average to the downside. But you know, I don't have much of a position left here because of these 2 profit targets here. So anyway, all in all, it has been a profitable trade, and in this environment, any profitable trade I will take. Okay, SPY. All right, so quickly, in case we have some new viewers who are not aware of this, but I do buy the SPY every day right at the close of the market, and I sell it first thing in the morning. And why do I do that? So based upon this study, since 1993, if you would have bought the SPY on the open and sold it on the close each day, so you buy it in the morning, sell it in the afternoon, you would have actually returned a negative 5.2% since 1993. But if you did the opposite and you bought on the close and you sold on the open the next day, the return would have been 568%, meaning that more than all performance came in after hours trading. You know, the prices got bid up in the aftermarket and the pre-market, and that is really what's responsible for the majority of the gains in the S&P since 1993. So the red line here is the buy in the morning, sell in the afternoon. The green line here is the buy in the afternoon, sell in the morning. And you can see over time since 1993, this has been a very profitable back-tested approach. And that is why I started using it. To date, I am net profitable on this, which is saying a lot, I believe. But there are drawdowns. Sometimes they're a couple years, right? If you would have started this here, you would have thought this was the worst trading method in the world. But if you would have started it here, you would have thought it was the best trading method in the world. So I do believe in this. I know there's ups and downs. So the important part with this is to position size correctly, although it's important with every type of trading. Position size, in my opinion, is the most important, because you know, if you load the boat up with 100% of your position and you do this and you had started here, oh my gosh, right? So you have to take a small position size, take the long view, and that's what I'm doing here with this. So you can see I did buy it yesterday right here at 280.66. I sold it first thing in the morning because that's what the rules are, right? You buy at the close, you sell at the open. And you know, it's clear to say I'm glad that I sold at the open, because now we are, you know, we're lower than the open. So I will be buying this again at the end of the day. All right, so those are my positions. Etsy, I did have an emergency stop. IBB, I will be getting out under the 102.70 level. Silver did hit 2 profit targets, thankfully, to help mitigate some of the loss on the other side. And then SPY, we'll be buying this at the end of the day. All right, so currently we're down 325 on the Dow. Interesting. All right. Hey, one thing I want to mention is, you know, if you're having problems navigating this market and you have any kind of impulsive behaviors, you really need to be careful. You know, people can sit down in the evening time, they can write out a plan of what they're going to do, and that's always easy when the market's closed and lights aren't blinking and emotions aren't running high. And a lot of times people write their plans, but when the market opens, they magically just go out the window. So if you have an issue with this, what I have found and what I have seen really makes a big difference is Tell your husband or your wife or your brother, your sister, or your boyfriend, your girlfriend. Let them know what your plan is, and if possible, let them be your risk manager. Let them be your enforcer. Okay, Greg, it's below 100. You said when you were going to get out. Yeah, but I think it's blah, blah, blah. Well, if you have someone saying, no, you said get out, this seems, kind of a crazy idea, but it's really not. The best trading floors in New York City, the best prop firms, the hedge funds, they all have something like that in place. They have someone above them that makes sure that they get out when they're supposed to get out. There's a lot of traders that trade on the floor, trade for hedge funds, prop funds. They do it for 20 years profitably. Then they say, I'm going off my own. I'm going to trade for my house. And all of a sudden they can't make money anymore. And the reason why is they don't have that person above them. They don't have the enforcer making sure, their risk manager, and all of a sudden it's just on them. And you can play tricks with your mind when it's just you. So get yourself a risk manager. Get yourself someone to be accountable to. I promise you it will make a big difference in your trading. Okay, so with that said, let's move on. And we're going to go through my watch. Okay, excuse me. Let's take a look at Apple. All right. Apple. Apple is interesting to me here today because at one point during the day we were under a 30 RSI. Now we are back over a 30 RSI. I will be taking a 1/2 position in Apple today if and only if it closes above 30 RSI. Those are one of my signals when it goes under the 30 RSI and then has the strength to close back up. So if this closes above 30 RSI today, at the end of the day, I will be taking a position. My stop will be any close below the 30 RSI, giving me a good risk to reward ratio. And my profit target will probably be up here in the 50 RSI range, this 20-day moving average somewhere in there. So it gives me good risk to reward. So if it closes above the 30, I will be taking this, but only half position because we are under the 200-day. So I will mark Apple. Amazon, we held that 50-day moving average pretty well, and then this day here we just went below it very strongly. We had a little bit of a rally, and now it's just failed again. So where would I be looking for Amazon? Right down in here, right down in the 200-day moving average range, 30 RSI range. This would be a really nice confluence of signals. So right in this range, this is really what I'm going to be looking for, and or close back above the 50-day moving average. But right now it's at a 40.91 RSI. It's kind of in limbo. It's kind of in purgatory. It's right in that RSI level where it's really not high enough to buy and it's really not low enough to buy. So I can promise you there are a lot of professional traders out here eyeing this level, and so that's what I'm doing as well. But of course I want to be patient, and because it's my plan, wait for the price to get to where my plan was. Boeing, well, did test the 200-day a couple days ago, rejected, and now we have fresh momentum back to the downside. So where would I be interested in Boeing? If we could get back down here, test this previous low, if we get back down here, I know the red bars, the MACD bars, are going to be quite shallow compared to this. This will give us a good double bottom with a bullish divergence, but again, have to be patient and wait for that to happen. For me to get interested in here, somewhere down in this range or close back above the 200 on the upside. Alibaba just continues to rocket down. Really no rallies in this whatsoever. The 5-day moving average is being used as resistance to the upside. It's a 25.85 RSI. Boy, is that low. I mean, it seems like every single day it's a 2% down. So not interested in Alibaba here. If we look at the weekly, maybe here at the third ATR channel at the week 145. So they may have another 5-6 points in it. That would line up, I imagine, yeah, that would line up with the sixth ATR channel on the downside. So that might kind of be a sweet spot in order to look at this, but it's not there yet. Caterpillar did try to rally a little bit today, but again, you know, looks like we made a new low here, 31.18 RSI. You know, it's okay. Someone could go in here and buy this at a 31 and just use a close below the 30 as their stock, as their stop. But I don't really see any other indicators other than the 30 RSI, and it is holding the third ATR channel, but I think there's better at this point. Canopy growth, you know, wound up here into this pennant, this flag, and then just broke to the downside. So, you know, if it closed here, it would be under the 200-day moving average. You know, if this were to close back above the 200-day moving average in the coming days, I might have an interest, but not today. Cisco also did break. So, you know, right down in this area where you have the confluence of the third ATR channel and the 100-day moving average and the support of this previous low, that would be a pretty sweet spot right there. It doesn't mean if it gets there, it's going to go back up, but I would imagine there will be quite a few buyers waiting for this down here, just like I am. So, you know, let's watch this in the future. Support with this previous low also lines up with the third ATR channel, also lines up with the 100-day moving average. And let's see what the RSI would be down there. Yeah, so you have a low RSI too. So if it gets there, it may not, but if it does, to me, that would be an excellent place to buy. DDM, this is the double leverage Dow. You know, when there's a back tested approach on the DDM is if you close below the 200, then close back above the 200 and keep it as long as it's above the 200, and then sell it when it's below the 200. It's a really good back tested system. I actually did buy DDM here when it closed back above the 200. Based on that, I had to get out the next day when it closed back below. Of course, I'm glad that I did. I'm glad that I followed my rules. But if we can get back above the 200-day moving average, I will be buying this. Also, we're at a 32.77 RSI. If we can go under 30, even intraday, and then close back above 30 at the end of the day, I will also take a position in that as well. If I take this under 30, over 30 position, I don't feel like that's the bottom of the market. I just feel like that's a mean reversion trade or a snapback trade. Snapback is like a rubber band where you pull it down, and you let go, boom, it snaps back. Sometimes you pull hard enough and it just breaks, and that may happen if we go lower. But if I did take that under 30, over 30 trade, I would be targeting a 50 RSI as my target profit. May only be a 2 or 3 or 4 day trade, but that's all I'm looking for. I'm not looking for a trend trade. I'm not thinking it's going back. I'm just looking for a mean reversion snapback trade. So nothing there. The Dow Jones is the same as the DDM. It's just that the DDM is double leveraged. Same thing here. Close back above the 100 is where I'd have to get interested to the upside or to the downside. A close under 30, back over 30. Walt Disney getting beat up a little today. Also, I do like the chart of Walt Disney here because we went into a nice uptrend. We moved sidewards. It was stronger than the rest of the market. Didn't go up, but it didn't go down. So the relative strength was strong. This is currently right now setting up a beautiful potential V2 for tomorrow. Do you see how here's day 1, day 2 washes out day 1. If day 3, which is tomorrow, if it can close back above day 1's close after coming from this really narrow consolidation range, that would be an excellent V2 entry. So not today. Well, actually, if it happened today, it would be legitimate. If it did this today, see how day 2 washes out day 1 and then closes back above day 1, that would be a V1. And I would take that for sure. But if we can get, so if that happens today, I would take it. Tomorrow, if we close back above day 1, that would also be a good trade, mainly because of this sidewards motion. And if we can get a reversal tomorrow, I would 100% buy that. Etsy, we talked about that. Facebook, close below the 50, back over the 50, ideally with the V1, V2 would be good. Oh, Bruce says Boeing fractal to the downside. Yeah, down below here would be the fractal. But then, you're now you're deep into the range, and you're pretty low on the RSI. So, Bruce, the best fractals are the ones that move sideways. Similar to Walt Disney. If we look at Walt Disney on the fractal chart, you see that alligator is sleeping. So I'll explain alligators in not in another podcast, not right now. Let's see. 5 below. Looks like we're going to lose the 100-day moving average. That's not positive. For me to get interested in 5 below, same thing with the others. An area down here where you have the 200 and the third ATR confluence and a low RSI to the downside, that would be an excellent position, and a move back above this previous high would also be potential. Gold, I am waiting for the 5-day EMA to cross over the 20-day EMA. That's the turquoise line here, having to cross over the blue line, which is the 20-day. That is a legitimate back-tested method, but currently it's underneath. So if we do have that 5 crossing over the 20, I will be buying that, but it's not triggering yet. Google, we closed below the 200 yesterday, and today we've gone down again. Boy, what a brutal day. So what would be my interest on Google? Close back above the 200, a strong, clean close back above the 200 on high volume would be a good entry point, or again, a close under the 30 and back over the 30 for a snapback trade. If we close back above the 100, then I could use that as a trend trade. I would be more patient, not get out as quick, and let it try to form a trend, because when it's back above the 200, you can say, okay, it's back in an uptrend in some sense. So under 30, back over 30 for a snapback trade, over the 200 for a trend trade. Goldman Sachs, just getting beat up. IBB, we have this. A close under this line here today would be my stop. All right, Intel. I do like Intel here, folks, and I'll tell you why. Back here on the 23rd of May, we had this big bullish engulfing bar to the upside on really strong volume. We went from under 30 back over 30. We closed back up into the range. We did close back up into the range, actually, because we closed back over this prior low, and then we closed back inside of the third ATR channel. The people that bought here did some selling here because they had that nice move that drove it back down. Today, however, we were under 30 RSI at one point during the day. Let's see if I can show you here. Okay, so you can see at the bottom here we were at a 2659 RSI, and now we're a 3171 RSI. So I will. And we close back into the range. So I will be buying Intel 1/2 position today, if and only if it closes above a 30 RSI. I will be looking for a snapback trade, probably somewhere up into this range, up into the 50 RSI range. That gives me from 31 to 50 as a potential profit target. It gives me from 31.77 to under 30 as my risk. And so it's a good risk to reward ratio. So if this and MACD didn't go positive today, which is kind of interesting, and you can see this volume has really picked up here on Intel in the last 4 days. And whenever you see a stock kind of going up, down, moving sidewards with a lot of volume, in my experience, that shows that there is some accumulation of that stock going on. So I will be buying Intel with a close over the 30 RSI. The Russell 2000, nothing much going on here. We're down into the third ATR channel. Same with a lot of the other indexes. I need this to close under 30 RSI, back over 30 RSI for a potential bounce back mean reversion trade, or close back above the 200, or a 10-day, 50-day moving average cross, which is a good back-tested crossover system. But none of these are even close right now on IWM. All right, so Coca-Cola had this nice move up, came back down. This was the day that it was a false breakout because it went up above this previous high, closed back below. It's just continued to move down. It is holding the 50 RSI, which is positive. You know, I like to wait for trades that have confirmation. I don't like anticipatory trades. And what do I mean by anticipatory? Well, it's at a 50.36 RSI now. I could go ahead and buy this and say, okay, I'm going to buy it here. If it closes under 50, I'm going to get out. Yeah, it's okay. You know, it's okay. But to me, the 50 is not as strong as the 30 or the 70 to the upside. So, I do that with deep dip buys under the 30s like we talked about on Apple and Intel. But when you're right here in the middle and you only have, it's a 50 RSI, that's all. And we broke below the 20-day. So I'm not saying this isn't a decent place to re-enter this position, but I would need a V1 or a V2 to trigger me in. It's a good spot, right? But don't confuse a good spot with a trigger. Make sure you have a good spot and then you have a trigger. All right, Lockheed Martin. This is a good example of here we make a higher high, we come back into the value zone, we move sideways, we spike down, we reverse back up. It is a V1, right? Compare that to Coca-Cola. We went up, we went down, but we've had no move to the downside and reversion or reversal back up. Where on Lockheed Martin, we move up, down, sidewards, spike down, reverse. It's not bad. It's not bad. It's a legitimate V1. It did reject the 20-day moving average. It's a 59.46 RSI. Not bad. The one thing I don't like about was yesterday's large bar to the downside, but the huge volume, and then the reversal here is not on that high of volume. It's okay. So let's watch it. MasterCard. It's hanging in there better than the rest, but nothing. Merck, looks like it's right at the 50 RSI. I don't like these big bars, and I don't like the big volume. We could revisit Merck if it moves sideways for a little bit, close below and close back above the 100-day moving average. That might be of interest, but not today. Microsoft is having kind of a tough day as well. I would be looking here on Microsoft for a test of the 50-day upward sloping 50-day moving average. I think that and the low of that previous range. Let's see where that would put us. Yeah, kind of somewhere in this area based on closing price. Lines up nicely with the 50-day moving average. So this would be a pretty good spot too. You have the support of that previous low, and then you have the support of the upward sloping moving average beneath you. So that's how I like to look at things. I like to look and see if we have confirmation from 1, 2, 3, 4 sources of support, but it's not there yet. Netflix lost the 100-day average pretty strongly today. So like with the rest of these, coming back down to the 200-day moving average here with the low RSI, that might be a good area. there's a lot of good potentials setting up right now. Not trades today, but if we continue down, there are going to be some good buying opportunities, some good risk to reward levels to take a look at. So the point is, keep your powder dry, wait for those to come to you. Don't go to them, let the trade come to you. Nike pretty violently lost its 200-day moving average today, and you can see we're at a 28.33 RSI. We did lose the support of the 30 RSI. So the people that came in at 30, they were not strong enough to hold it up. So where would I be interested here? Close back above the 200 would be my first choice. Yep, that's right, Bruce. A number of stocks have gotten down into the value zone on the chart. Now just need an up market. Yeah, they're in the value zone. That's the good. That's good. That's the zone. But now we're looking for triggers, right? We're looking for triggers to trigger us into the trade, and V1, V2 are I believe the best kind of triggers. Philip Morris did bounce off the 200 yesterday. Did go below the 200, back above. It's a 34 RSI. Not bad. I want to watch this. I want to see how this can react. I'd like to see it move sideways for a few days, letting us know that there's no more sellers left, and then moving back above. That would be interesting for me, but not right now. PayPal, nothing. Lost the moving averages today. Q's, we're to 34 RSI. Again, close below the 200, back over the 200 on the Q's is a good, back-tested, proven approach. But we're not quite there yet. We maybe need 2 more days down, and I'm pretty sure you'll have a huge group of buyers coming in here. And that's where you want to get in your trades, is where the other buyers are going to be. We talked about silver. Did hit 2 profit targets on that today, which was nice. S&P, S&P is rallying back a little bit here. That's good. Did test the 100-day moving average, and I don't know if it's going to close there, but it does look fairly good right there. I will be buying this at the end of the day, of course, with my overnight SPY trade. Square, if you guys remember, I was considering buying this yesterday when it closed, when it went above this fractal. And I was actually kind of torn about it, but I decided not to buy it for 2 reasons. 1, it closed below the high of the fractal, and 2, it rejected the 20-day moving average. So, on days when things are not going your way, look for the bright things, look for the bright spot, look for the things you did correctly. And that was a correct trade, obviously, by not taking that. So, don't beat yourself up too bad, and look for things that you did correctly. AT&T, moving sidewards, going down, reversing. Not bad, actually. I mean, not too bad. This bar is a little larger than 1 ATR on a lot of volume. It is technically a V1 right now, but it didn't happen in the value zone. I feel more comfortable it was down in here. What do we got? Okay, we've got 22 minutes. Okay, so this is a very interesting chart, everyone. This is TLT. This is the 20-year bonds. And what is this telling us today? Well, we did hit the 6 ATR channel, which is kind of an extreme level to hit. Do you see how we opened higher, but now we are closing lower than the open, but still higher than the previous day's close? That's usually a signal that you're at a short-term top. And all this, the reason this has gone up so high is because people are scared of the market. They're looking for a safe place for their money to get some yield. And so that's what has driven up the price of these bonds. But this is a bearish price action right here today. Rejecting that 6 ATR channel and closing below the open. That may be positive for stocks and equities. It may be. This is somewhat of a reversal bar. So if this goes down, most likely the market will go up, because then money will come back out of bonds, back into stocks. So this is interesting. And look at the volume. You know, we can't just go off of this, but it definitely is interesting. You know, this could put us at a short-term bottom in the market. Maybe. We'll have to see. Tesla actually up a little today, just moving sideways. Natural gas gapped up a little bit. Oil is quite interesting here. You know, we had this big washout of these lows and reversal V1. Looks like it's going to close above the 100-day moving average. This isn't bad. We'll watch that. Visa is down. VIX, of course, is up on a day like today. Verizon, you know, Verizon is somewhat interesting here. We moved up nicely. We actually took this trade. We took this trade here and we rode it up to this area. Then we got out, but we did move sideways. We are coming down into the value zone. We did test the 50 RSI. We tested the 50 moving average. We tested we're at a 52 RSI. So it's not bad. I really would just like one more day down and reversal back up for me to get interested in Verizon, but it's definitely on my radar. Energy, as with oil, it went down, closed back above. It's still under a 30 RSI. If this closes back above 30 RSI, that'd be positive. Real estate got whooped up on today, and healthcare really got whooped up on also. Okay, so real quick, we don't talk about these moving averages very often because they haven't been very close to crossing, but you know, these are all legitimate back-tested approaches. The 5 crossing back over the 20 on the QQQs, that's a long ways away. This is a very, very interesting one. This is QLD. This is the double leveraged NASDAQ. Currently, you can see we're underneath the 200-day. If this closes underneath the 200-day and then closes back above the 200-day, let me show you the back test on that. QLD, 200-day moving average, simple day of cross. So since January of 2000, if you had used this approach, and remember the approach is closing under the 200-day, you're out. Closing above the 200-day, you're in, and you stay in until it closes back below. You can see this approach, 642.9% return compared to buy and hold. Buy and hold was a little better in percentage terms, right? It was better. But look at the drawdown by using this approach, only 35% compared to an 83% drawdown. I would take this option every time. Make 642 or only lose 35 compared to 737 and lose 82. So you can see this is a good back-tested method. It only wins 22% of the time, so it doesn't have a high win percent, but the risk, the gain versus the loss on this is about 15-1. So I am watching this carefully. If we get a close back above that 200-day moving average, I will definitely buy this. It will not be a mean reversion trade. It will just be a stay in over the 200-day, get out under the 200-day. DDM, same kind of back test, but it'd have to close back above the 200-day. The SPY, close below the 200, back over would also be interesting. So those are some potential trades that we need to look out for. Good trades that you're really patient for, you wait for. So, all right, let's go to the stocks that I flagged and see what we're going to do. All right, quickly, let me just take a look at the current positions. Yes, we got out of Etsy. IBB, come on, baby. It has the potential. It has the potential to keep us in this trade if it can close back above here. I doubt it, but we'll have to watch it. Silver is fine. S&P has definitely rallied. We'll be buying that. All right. So let's go to our potentials for the day. So Apple, I will be buying a half position if we can close above the 30 RSI. Intel, I will be buying a half a position if it closes above the 30 RSI. Lockheed Martin, I mean, that is a pretty strong trade, actually. It's a 61 RSI. It's a little high, but you know, it's within the parameters, and we did make a higher high come down. We did move sideways. We did spike to the downside and reverse. So I do like LMT here, which is Lockheed Martin. This is above the 200-day, so I would be taking a full position here. So we'll wait till the last minutes of the trading day, and we'll take a look at that. Medtronic did have this really strong break over the 200-day, moved up, came back down. Currently we're to 6207 RSI. It did test the 200-day today. Does also have a V1, has the third ATR channel above us, which is a little concerning, but what's mainly concerning is this bar before it, which is larger than one ATR, and ATR is from here to here, or from here to here, or from here to here. This is larger than one ATR. I tend not to get involved in trades where the previous bar is larger than one ATR, and this volume. So I think I'm going to err on the side of caution here and see if we can get it closed back below the 200 and then a close back above. It's a tough one for me, but you know, all of my mentors in the past have cautioned me against getting in front of or taking a trade right in front of a large bar and with volume. So Philip Morris. Q's. I think I'm going to have to wait for that 200 down there. And then oil. So if we look at oil on the weekly chart, you can see, you know, it did hold support here at this previous range here. It did bounce off the 200-day moving average. That's, you know, it's okay. This is a big strong bar though, folks. I mean, it's a big strong bar on high volume, which indicates, you know, something has changed. If I do take this trade, at the end of the day, I will definitely only take a half a position, of course, because we're under the 200-day. Did form a V1. So, yeah, this is a potential for sure. All right, let's narrow these down a little bit further. Apple is holding above the 30. Intel is holding above the 30. Lockheed Martin. It's not bad, actually. It's not bad. The Qs are not there yet. Again, close under the 200, back over the 200 would be the preferred area for the Qs. You know, to put it in perspective, it's a 3420 RSI. I'm sitting and waiting, right? That's just me. That's one trader, but there's tens of thousands of traders out there with the same mindset right now. It's not quite low enough for them to buy. So kind of in a strange self-fulfilling prophecy way, it increases the chances that it will come down here because the buyers are not stepping in. But once we get down to this area, I will start buying, and so will a lot of other people. And that's what will move it back up, possibly, right? So you kind of have to think, you have to trade the traders. Just like in poker, sometimes you play the player, you don't play the cards, but you play the player. It's kind of the same concept. All right, so nothing on Qs. Although close back over on the QLD tomorrow would be an excellent back-tested entry point. So we'll be watching that. So I am very light at the moment. think I've only got about 15% of equity at work, luckily, right? All right, so Etsy we're already out of. We can just get rid of that. I'm waiting for gold. IBB, looks like we're going to have to exit that unless we have a miraculous save. SPY will be buying at the end of the day. I can get rid of those lines. VIX. Yeah, all right. All right, so IBB looks like we're going to have to be getting rid of that for a loss. Silver, we will be staying in that. SPY we will be buying. So it comes down to Apple over the 30. We'll buy Intel over the 30. I'm going to buy Lockheed Martin. You know, it looks like I'm going to have to buy that. I really can't talk myself out of that. By the way, it's a good idea to try to talk yourself out of a trade. You know, whenever you think, oh, it's a good trade, try to take the other side. Try to be devil's advocate. Try to really talk yourself out. It's a good policy. You know, do angel devil. Try to talk yourself out and say, do I really need this trade? Do I really, is this an impulsive decision? Or do I really need this trade? And if you really can't talk yourself out of it, then it's probably a decent trade. And, you know, when I look at Lockheed Martin, made a higher high, it moved up, it moved down, it moved sideways. Today, it, you know, stabbed down, went below the previous day, and actually went below the previous range, reversed back up, triggered a V1. It's above 50 RSI. So, you know, where's my stop going to be on this? You know, if I take this trade, my stop will be, this is the washout bar. This is day one, day two washes out day one. Probably a close below the halfway of this bar. So I'll keep it small if I'm wrong. All right. So I feel good about all three of those. And oil is somewhat compelling also. And we did have a big move down. We had a big reversal. We have a V1. We did bounce off the 200-day, and that volume there is really kind of interesting for sure. So, all right, we will just have to see. Bruce says there's a SPY kangaroo tail to the upside on SPY. Yeah, it was a little higher before, but yes, you are correct. And something else had one too. I can't remember what it was. Was it the Qs? Apple? No. Let me take a look inside. Yeah, see, we had that big strong move up. It's moved sideways. Volume has not really increased. That's actually pretty strong. Yep, you're right, Mountain Doji. QQs is finally at that tempting buy level we identified. You're right. Almost there. Almost there. Almost there. You know, another good thing is when we get down into these levels, when you see a move back up on really strong volume, that's another good indication that you've got somewhat of a temporary, intermediate, or short-term low when everyone jumps back in and it shows up in the volume. You know, the nice thing about volume, you can't hide from volume. Volume always shows up. So, all right, what do we have? About 5 minutes. Let's see where we are in the market. So now we're only down 250 only. All right, so now we're down 250. So we have rallied a bit higher off the low at least. Take a look, see what's going on in accounts here. Yeah, so I am very, very, very light percentage-wise at this point, which is a good place to be. But like I said, I am considering adding Apple, Intel, Lockheed Martin, and oil today. But again, they're half positions, right? That Apple's a half position, Intel would be a half position, Lockheed would be a full position because it's over 200, and then oil would be a half position. So even though it would be 4 positions, it's really like only taking 2 positions. All right, 5 minutes to go. Let me take a look at the SPY here. Yeah, ooh, see what I was talking about? This is on 39-minute. Look at the volume that moved this bar up. That's a good sign. So just to get some things off the table, I'm going to go ahead right now and I'm going to buy my overnight SPY position just so I can get something off my plate before the market closes.
Order filled.
All right.
Order filled.
All right, 278.45. All right, so that's my overnight SPY position right there. Okay. Looking at IBB there. I'm just going to go ahead and get rid of IBB right now.
Order partially filled.
All right.
Order filled. Order filled.
Okay, IBB's out of the way.
Order filled.
Okay, I'm buying Lockheed Martin now.
Order filled.
All right, got Lockheed Martin. Can I get Apple and Intel and oil? I do like oil there. Oops. Uh-oh. All right. Oh, I'm running up against the time, aren't I? Just give me 1 second. Let me get these orders in.
Order partially filled.
Okay.
Order filled. Order partially filled.
Whew.
Order filled.
All right. What do we have? We have 30 seconds. All right, we got oil at 12.25. and Apple looks fine, and Intel looks fine. And Lockheed Martin, we got
Order cancelled.
339.97. All right, folks, what a day, huh? Let's see what the final damage was. 224 on the Dow, so not bad. All right, so we did enter Apple with the close above the 30. We did enter Intel with the close above the 30. I did buy Lockheed Martin, and I did buy oil. So, oh boy, did I get... Yes, I did get rid of IBP. I thought for a second I forgot. It happens sometimes. That'd have been a bummer. But yes, I did get rid of IBP, and we locked that loss in. So, all right. Hey, before we get to questions and answers, I just do want to remind everybody that I do offer private one-on-one teaching and coaching and mentoring sessions in the evening time via Skype. So, if you need some help with your trading, let me know. I do a really good job with my students. I've had really good success. Generally what I do is I have an initial phone call with them or a Skype call, and I just try to get to understand them better, what their trading approach is, what their challenges are, what they need help with, and then I try to put together a program for them or an approach for them that fits, their financial needs, fits their time preference as far as when they want to trade, or works around their lifestyle. So if that's of interest to you, my hourly rates and my contact information are in the description of this video. So feel free just to send me an email. We can set something up. And also, if you have any questions about anything we talk about here, you're welcome to email me as well, even if they're just questions. I'd be happy to help you out. And then lastly, if you found this video or this channel helpful, if you're learning something from this, makes me really happy. But I would ask that if you could hit the thumbs up button, I would really appreciate that. It helps with the search results on YouTube and helps me grow the channel. So if you could do that, I would really appreciate it, or even share it on social media. That'd be awesome. Okay, enough of that, and let's see if anybody has any questions today. Hey, thanks, Bruce. I will have a good hike. Thanks, buddy. And hope you have a good time playing golf today. Thanks for coming by. Dr. Jorgensen says a number of stocks have gotten down into the... Oh, yeah. I already read that one. All right. So anyone else have any questions about today's activity or about anything else? So like I said, we did enter Apple with a close above the 30 RSI. That's a snapback trade. I'll be targeting this area up here. Intel did close above the 30 RSI. I will again be targeting probably the 50 RSI up into this range. This is another snapback. Lockheed Martin triggered this on a V1 stop. My initial stop, if it does tomorrow, will be halfway of this washout bar right here. And then oil did buy this on this nice V1 here. I'll have to see how this one reacts. Probably my stop on this one would be a halfway of this washout bar here today. I could use the 100-day. It feels a little tight to me. It feels like it's just inside of noise, and it doesn't really offer any real intrinsic support at this point. But we'll see. We'll see. Hey, Mount Doji, AMD, yes, let's take a look, sir. Hey, David, thank you. Appreciate you coming by. You have a great weekend as well. It's always good. It's always great to see you. Thanks. All right, Mount Doji, let's take a look. All right, well, yesterday we had that huge, big move up. I think Ramble Ron had that on an option position, which is great. Did give back quite a lot today. The thing that I don't like about this Mount Doji is Well, you can look at this two ways. If you look at just the bar, you're looking at about halfway from here to here, and we have closed back below halfway that bar. That's not positive. But if you look at this objectively, it closed down here, right? It gapped up here. So the length of this bar is actually this big. And if you measure from here to here, and then you measure the halfway bar of that bar, technically it did hold above the true range of this move from the close to the top. It did close halfway. MACD went positive. We had more volume to the upside than to the downside. So on the other hand, we had this previous resistance up here. That previous resistance should have acted as support, and it did not. So I think it's more positive. I think it's more bullish than bearish, to be honest with you. It was able to hold the halfway of the full range of this bar. MACD went positive. We're still above a 50 RSI. May not be a bad place to enter. Certainly better than up here. We know that, right? We get a little bit of a sale on it, but it's above all the moving averages right here. Well, I don't think about the ones up. Oh yeah, no, it is fully above everything. Yeah, it's actually pretty strong. I wouldn't mind buying it there. Thanks again for taking time to teach all of it. Right now, I'm just trying to learn as much as I can, sitting on the sidelines right now to absorb it during all these down days. That's great, Mount Doji. So smart. That's the way to do it. And I'm hoping you're absorbing some of the things I'm teaching. So if you have any other questions, just let me know, my friend. I'm happy to help you out. But I feel like you're starting to get it. You asked really good questions. I feel like it's kind of starting to make those connections in your brain. But remember, risk to reward ratios, getting out quickly when you're wrong, letting your profits run to the upside is important. And then, of course, you know me, I like to take profits, partial profits, as it moves in my favor. Okay, any other questions? All right, so it was a down day today. Not too bad. Etsy got us a little bit, but that's how it goes. But other than Etsy, I was very, very light. Percentage-wise, I think people would be very happy to have lost a very small percent like I did today, compared to what the market was down. So, all right. So if there's no other questions, I hope everyone has a good day. I hope you can make it back tomorrow. Tomorrow is Thursday, right? Yeah. Hopefully you can make it back tomorrow, and we'll do this again. But be careful out there in your trading. Be conservative. Take small position sizes. Adhere to your stops. Don't be impulsive, right? Don't be impulsive. It's the main thing. This is the kind of market where traders really can get hurt if they let their emotions get the best of them. So stay calm, be patient, make your plan, wait for the price to come into your level, and then if it goes your way, be patient with it. If it doesn't go your way, be impatient with it. So that's the best advice I can give everybody. So all right. Okay, well, enjoy the rest of your day. Hope to see you tomorrow, and thanks for tuning in. Take care, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice. and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.